Hey, what's going on, guys? It's Andrew here, and today I'm going to be teaching you guys how to chart, how I set up my charts, and how I look for setups throughout the week. So the first thing we're going to want to do is identify the type of chart that we want to use and the type of play that we want to make. So for example, if we were going for a scalp play, we would not be using this 4-hour chart here. We would be looking at a smaller time frame. But since I primarily look for swings, I'm going to be using a longer time frame, such as the 4-hour or the daily chart or the 1 hour. As long as it's a higher time frame than what we would look for in scalp plays, it's going to be more effective because these longer movements are going to be what we need in order to set up the bigger plays. So now that we've identified the time frame that we want to use, I'm going to be looking for a swing play. So I'm going to be using this 4-hour chart here. We're going to want to first identify the trend. So as you can see here, we are in an uptrend, which how you identify that is you look for either higher highs and higher lows, which is what we see in an uptrend, or lower highs and lower lows, which is what we see in a downtrend. So in this case for Facebook here, we are in an uptrend. As you can see, we had a low down here, and then we had a big high right here, and then we had a low right here. This is our first signal of a higher low, which then, as you can see, we make a higher high right here, which is our next signal that we are in an uptrend. And for a downtrend, we would be making lower highs and lower lows, kind of following this direction, and we would slowly be going down. So now that we've identified the trend, we're going to want to start plotting support and resistance levels. Basically, what this means is at a support level is where we're going to see buyers come in and they're going to drive the price up. And at resistance levels, it's going to be the opposite. We're going to see sellers come in and they're going to drive the price down. So what I like to do here is I like to first start off with the highs and lows of the chart. This is going to be right down here for the low of the chart. As you can see, the buyer stepped in down here and they made the price go up. And now we can see the high of the chart, which is right here, where the seller stepped in and made the price go lower. And now we're going to be looking at areas that acted as support or resistance frequently. So we're going to be looking at areas like right here. As you can see, there's lots of support here as it tested here, 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 and multiple spots right there. We're going to also mark here. As you can see, this acted as support here, 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 multiple times. And then also another rule is that places of support and resistance, when the resistance is broken, they often act as support again. So as you can see, this first acted as resistance right here, this 245 level, and once it was broken, it came back and it is now used as support. So that's also a really good spot that we can use. And we're also just going to mark highs and lows kind of on the inside of this chart, not the ultimate highs and lows, but places where the price reacted really well. So as you can see right here is a good one because it came all the way down and bounced off this level extremely hard. This is another level where price reacted a lot, where we can see that it bounced off of multiple times. And right here is we're going to mark that again because that's also where price reacted a lot and it bounced off of really hard. Now that we have our support and resistance levels, we're going to want to identify patterns that could possibly be in play. Now I know that Facebook has a symmetrical triangle pattern in play, as you can see right here. I'm going to draw it out. As you can see, it's forming this sort of triangle here. Now ideally, you don't want any of these candles to break the line, which would invalidate the pattern. But my rule of thumb is I like to see that if it does break, it can only break slightly. And it needs to be reclaimed really quickly because we do see fake outs like that sometimes. Sometimes the support and resistance levels are not perfect or the trend lines aren't perfect either. But as long as they hold pretty accurately and they regain quickly, as you can see, this candle went down below the line, but it actually closed above it. So I'm going to keep that as valid, and I think it still looks really good on the chart and the pattern is still holding up extremely well. So if you're first starting off, you're not going to understand or register any of these patterns when you're looking at a chart. So what you can do is you can always Google patterns and you can always look and then compare them to your charts. But I already know because I've been through this a lot that this looks exactly like a symmetrical triangle. So this would identify the breakout if we could break up or break down. But over time, when you chart more, you're going to understand these patterns. You're not going to need to Google them. You're just going to be able to identify them on the chart. Now, the most important thing that happens when we have a chart set up is we want to identify our entry. So most people would think that we'd want to get our entry once this upper or lower trend line breaks. But if we're going to be entering calls or a bullish position, which means we think the stock is going to go up, we want to get in at the lowest price possible. So in order to get in at the lowest price possible but also have this pattern still forming and still valid, is we want to get in on this lower trend line here. As you can see, these are our best entries, like right here. It bounced up and we got a really nice play right there. If you played that, same with here, it went all the way to the upper trend line, or same with here and here. It looks like it's going to be actually a great entry. So you don't want to enter when it's already breaking out because, as you can see, you've already missed 20 to 30 points. So you want to enter at this bottom trend line because that's going to be your best entry. You're going to get the most points out of that. And if you were playing a bearish position where you think the stock is going to go down, you would want to enter at this top trend line here. As you can see, when it hit this trend line here, it went all the way down. And when it hit this trend line again, it went all the way down. So that's going to be your best entry for a bearish position or that you want the stock to go down. So a setup extremely similar to the one that we were just looking at was Apple recently. It had a symmetrical triangle, as you can see right here. And it played out just like we expected. So it was a bullish breakout play. And as you can see, the best entries were the touches to this lower trend line here. And it broke out and it made a really nice move up, as you can see. So if you got an entry near, let's say you played this last bounce off the trend line, which is near 112, you would have played it all the way up to already almost 130. So that was an extremely good setup, extremely good play. It just shows how good these chart patterns and learning technical analysis and learning how to set up charts can definitely pay off for you. So another pattern I really like playing is this falling wedge pattern. As you can see, it's basically two trend lines that are eventually going to converge together. And usually what happens is the price finds a support level and it breaks up, and then you see a huge breakout above this upper trend line. So TTCF is a great example of this. As you can see, we have this upper trend line here. It's slowly converging onto this lower trend line. And then once we got this bounce and the break above this trend line here, as you can see, it just absolutely exploded up, rocketed up, got a bunch of volume down here. And if you played the breakout of this trend line up here, you had a really solid gain. So I just wanted to show you guys how much patterns in trading them helps you and how they can help you get optimal entries in order to play a stock that you like and in order to make a lot of money. Whether you're playing shares, you're playing options, whatever you're doing, these patterns and learning how to chart correctly helps a lot. So I appreciate you guys watching. If you like the video, please make sure to subscribe, and I will see you guys next time.